Well, we begin tonight's show in Egypt, which is currently facing a review by the International Monetary Fund on how the country's economy is faring after the Washington-based lender extended a $3 billion facility to the country last year. Egypt did obtain the first tranche of the loan, amounting to about $347 million last December. Now, Egypt has resorted to the help of the IMF after an economic crisis made more severe by the Russia-Ukraine conflict. In return, President Abdel Fattah el-Sisi's government committed to various IMF-guided economic reforms, and they include a free-floating exchange rate for the Egyptian pound and a reduction in fuel subsidies. Now, the government began implementing these structural reforms even before the December approval and has continued its steps over the past 3 months. And let's now go back to our top story of the day. Of course, Egypt is facing its first review from the IMF. And let's get some more insight on that review from Adel El Mahoui. He joins us now in Cairo. Adel, good to see you on the show. Now, we do know that Egypt's government agreed to commit to a number of reforms over that $3 billion IMF support package. They included austerity measures, a flexible currency going forward, and a greater role of the private sector as well. Now, as the IMF begins that first review, what is the track record so far in Egypt on these structural reforms that the government committed to?
So you've basically mentioned three main headlines that Egypt should be working on according to the agreement with the IMF to get a loan of about $3 billion over a span of 46 months. And it is oil prices, foreign currency exchange rates, and the government's investments in the economy and taking that out gradually. In terms of the forex rates, we've seen the government taken in the past few weeks a third step to devalue the Egyptian pound, and since then it has been continually rising. It jumped suddenly from about 15.7 last year to about this year or this week trading at about 31, almost 31 Egyptian pounds for $1 US. In terms of oil prices, we've just seen the latest meeting for the government's oil pricing committee, which has also increased the prices of prime gasoline, of octane 92 and 95, along with some variants of oil products like mazut as well. So in these regards, it seems that the government has been moving on track. There is another expectation that we may see like a fourth round of devaluing the Egyptian pound, meaning that seeing another hike or jump in the exchange rates for the Egyptian pound, especially against the greenback. In general, there are no specifics about what is going on, but or if that it will actually happen. But the government has been committing to what it says, that it will take its hands off controlling the forex rates in the country, unless there is, in extreme cases of extreme volatility in the foreign exchange market.
Well, it is interesting, Adele, because initially this IMF support package and a deal with the IMF was not received so well in Egypt. In fact, critics said that the measures will be they question whether the measures will be enough and whether, of course, the social impact of these austerity moves will be bearable for the majority of citizens in Egypt. Have the measures helped to improve Egypt's economic situation so far?
Well, we can't really evaluate the impact of that just yet, because we're talking about a few weeks through which these latest measures have been taken. But in terms of public impact, of course, it has been tremendous and huge. We're talking about, in general, about 100% inflation over a year. Just last month, February, have seen a headline inflation of 40.6%. and core inflation of about 31.26%, which is a staggering number that has not happened since 2017 and 2007 and 2016 respectively. So that's the general impact. In terms of the economy, it definitely indicates that there is an alleviation of the financial commitments that the government has been sticking itself with in terms of subsidizing oil prices or defending its Egyptian pound against the foreign exchange rates against the US dollar specifically. So that means that the government is no longer pumping US dollars into the market to control the prices. So it should have a positive impact in terms of these two steps specifically. But to what extent, this is still to be revealed. And that's actually what the IMF has been trying to lead with its routine rounds of inspections to the economy, the Egyptian economy, and the government's performance and its abidance to the promises it has given to the organization.
And shifting focus just slightly, one of the things the government did commit to was expanding the role of the private sector in Egypt's economy. Now, we know the state did say that it plans to list two military-owned companies on the stock exchange today. Is there any update on that?
Well, they have not been offered, as in explicitly a public offering as was expected, or at least as the plans have been announced. There are two tracks the government is working on. One of them is just going through direct offering to strategic partners and investors, through which it is planning to offer around 10% of the two major military companies, Wataniya, an oil services and sales company, and Safi, which produces bottled water and olive oil, and a series of food packages as well. Now, the two companies might be only given through direct offerings to strategic partnerships, or to public offerings, or the mix of both. That is not still clear, but what you know for sure that CI Capital, the firm responsible for that offering today, has started investigating with strategic partners and investment firms in the region and across the world to see their appetite for these shares. And accordingly, it will continue this investigative round for 1 month, according to some local news sources here. And throughout this month, it will check the appetite of these companies and do an evaluation. 10% will be enough? What is the fair value according to the appetite it has discovered throughout the next 4 weeks? And will it just be offering 10% or even more, maybe up to 20%? And that comes also not just in these two military-owned companies, but also there is a third path through which just this week we've seen Misr Insurance, a giant insurance arm for the government, moving from the government's ownership into Egypt's sovereign fund, through which there are talks that they may also be thinking to offer 20% of that insurance giant, but still waiting for confirmation.